In foreign exchange markets, price moves from supply zones to demand zones and back. Over and over again, professional traders and big institutions have mastered this technique to be profitable in the markets. In this video, I will be sharing a MT4 robot coded to detect these supply and demand zones. It will also help a trader to get into decent trades on high probability areas. You don't have to set buy or sell limits or wait for the price to hit these levels. The robot will automatically take trades for you. This supply and demand robot has been created to trade on currencies, stocks, metals, commodities and oil. Because all markets create demand and supply levels, you know the drill. Like, share and subscribe and stick around for the full video. Installing the robot is the same old process. Follow my steps on the screen. For the settings of the robot, you can define your lot. If it's of any importance, you can set the background color. Set normal stop loss to true to activate your set stop loss in pips. Set trailing stop loss to false to disable trail stops. This setting, however, is very useful under different settings. Set other parameters as shown on the screen. I will provide a set file that you can use to load the settings for the euro-dollar currency on a 4-hour time frame. Always remember to save your settings for future reference. Click on OK to load the supply and demand robot. All done. Robot running on a 4-hour chart. Like always, we test for the robot's probability of wins to losses. Let's do a backtest from January this year up to December using the same settings used on a live market. We will be able to estimate how the robot fared on a $1,000 deposit. All factors such as slip page, spread, delays, and change in market quotes are not considered, barely because they are out of our control on a backtest. Backtest has begun. Watch closely. The demand and supply robot in action. Watch how it executes and closes the trades based on your set parameters. Once price retests a verified demand level, the robot immediately executes a trade, risking 10 pips and targeting 30 pips in case of a successful bounce in price off the demand zone. There are hundreds of such scenarios on a single currency. Risk management is key. Of course, not all trades ends up in the profit margin. Some you win, some you lose, is part of the game, isn't it? During supply, the big institutions tend to sell that asset, and that causes a significant change in the market. Price may take long before breaking above the verified supply zones. As retail traders, we benefit from these type of price rejections. The robot will set a reasonable stop loss above the supply zone and ride the wave. The robot will constantly look on the chart where the price has repeatedly encountered resistance and struggled to break through. These could indicate a supply zone. That's one of the robot's main logic. The robot has inbuilt support and resistance indicator to help it determine the level of resistance or support. 90% of these levels act as demand and supply. You just have to pinpoint where there is more market volume using candlesticks pattern or volume indicators. Supply and demand works best on big time frames, mostly 4 hours and above, because a lot of data can be collected and analyzed. I wouldn't advise anyone to run this robot on a small time frame. It will not collect enough data to make a 30 pips move decision. It's not only supply and demand that moves the markets, of course. There are other factors to consider, like the fundamentals side of the market, things such as commitment of traders, or the COT, retail sentiment, seasonality, growth domestic product or the GDP of a country's currency, inflation, and unemployment, among other factors to consider. So this robot is just a tool to help traders make a trading decision. When a trade is executed, you have to confirm your trade both technically or fundamentally. From the backtest results, the robot had made a profit of $300 by the fourth month, that is April 2022, using 0.20 lots and 1:500 leverage. That's a pretty good performance. I set small loss and big profits, be quick to close down your loss, but let the profits run. That kind of setting. On average, the robot took 3 to 4 trades per month. The win rate would vary depending on that month's activity, but the goal is quality trades, not quantity. This is not a hedging robot or a grid robot, where trades are taken as the price moves and applies martingale to recover losses. The supply and demand robot uses constant lot even after a loss. That's a good money management. You won't have to get worried that the robot will blow your account within 1 day of trading. The biggest downside of this robot is economic news. During major economic news like the non-farm payroll, or NFP, the markets are highly volatile, and price may break through major demand or supply zones. So in case you are running this robot during news time, be very watchful and monitor your trade.